Hello and Assalamu alaikum everyone. This is MBA, which is basically the Friday MBA, Accounting 5300, Accounting for Executive. This is the first online session as I tried several times to reach you guys, but you didn't pick my phone. So that's why I will record this video on chapter 6 and then I will upload it on SIS, which is Southern Information System. You just have to log in and you will find this video inside the class materials section. So after completing this or after watching this, if you face any kind of difficulties or if you want to call me, just send me an email or just you can call me. My number is 01726 280436. So this is for the Friday and evening batch for Spring 2020, Accounting for Executive. As discussed earlier, before the lockdown, we finished chapter 4, which is the basically worksheet, and we started with the theoretical concept about inventory costing, which is chapter 6. So in chapter 6, we have covered around what is an inventory, how to count the physical inventory, and what are the different types of inventory. So as promised, then we're gonna discuss the mathematical problem on inventory costing. So here I am. So hopefully you all have, or I believe that you all have the book, which is Kaiso's Accounting Principle 12th edition. So if you have the 11th edition, just contact with those people, those have the 12th edition. So it's math number P6-3A. P6-3A. So here is the solution, but before going to that, I will read the question first. So I discussed in the class several times that we can actually we can actually see the inventory value of the cost of goods sold. We can actually get the value from if we use three methods. There are basically three methods. First in, first out, which is FIFO in short. Then last in, first out, which is LIFO, and the average method. So I hope you all have the concept about the stock, the inventory. But now here you have to consider that this is the stock, this is the warehouse, and you have to calculate your inventory cost. Alright, so I will read out the question first. So it's P6-3A is Secong company had a beginning inventory on January 1st of 160 unit of product. Here they have mentioned a specific product. In your exam you will get another specific type of product at a cost of 20. So at the beginning of the year they have certain inventory, as I discussed earlier. To start a business, you will not start a business or you will not start a single year without having a beginning inventory. So Secong Corporation also had a beginning inventory, which is 160 units and each cost $20. And during the year, the company purchased the following items, which is on March 15, 400 units, each cost $23. Then July 20, 250 units at $24. Then September 4, 330 units at $26. And lastly, on December 2nd, the company bought 100 units at $29. So you can see one thing, the price is continuously increasing, has been increasing from the beginning. So keep in mind that. Okay, so the instruction is, first you have to calculate, you have to show the cost of goods available for sale. Available for sale means before selling how much goods I have. Beginning plus the entire year, how much we have purchased. So as a whole, how much we have before sold out. Okay, so you have to actually show the cost of goods available for sale, and then the ending inventory, which means after selling how much inventory Secong company have, and the cost of goods sold, the price, the cost of those inventory, those the company have already sold. So three things using three different formulas: first in first out FIFO, last in first out LIFO, and the average costing. So here you have how many things to do? 4 things. 1, cost of goods available for sale as a whole before selling. Then you need to show 2 different things using 3 formulas. First thing is ending inventory and the cost of goods sold using 3 different formulas like first in first out FIFO, last in first out LIFO, and the average costing. So another crucial information has given: during the year 1000 units have been sold. So the entire calculation is for the cost of goods available for sale, which is 1240, and we have sold 1000 units. So how much we left? 1200 to 40 minus 1000, which is 240. So minus 100 equals to 240. So we need to worry about this 240 units as an ending inventory, and then using this we can get the cost of goods sold under 3 specific methods. So let's begin with. So first thing, number 1, Secong company cost of goods available for sale. Cost of goods available for sale, here date, explanations, units cost, total cost. The most easiest and interesting thing about this section is you will be given 4 marks in the exam for this. If you can get this answer, I will automatically give you 4 marks. Okay, so 1 which means the beginning inventory. I will not mention 1 or January 1st in the question. I may mention that beginning inventory of the year, but you have to write 1 which means January 1st. Don't forget to include the beginning inventory. Most of you, I repeat, most of you or 60% of you make mistake during exams. You forget the beginning inventory because the information is given in the first or second line. You guys always tend to follow the informations, those are in highlight, but don't forget it. So it was given 160 by unit cost 20, so multiplied by 3200. Second one, March 15, which is purchase, which is a purchase. First one is beginning inventory, then the purchase. 400 units at $23. So if you multiply, you will get the total cost is 9,200. Then July 20, which is 7/20, again purchase 250 units, each cost 24 multiplied by, and we get the result of 6,000. Then September 9th, which means 9th 4, September 9, not 4th September, so 9-4, again purchase 330 units, 26 per unit. So if you multiply, we will get 8,580. Now the last one, December 2nd, which means 12-2, the last purchase of the year, which is 100 units and 29 per unit. If you multiply, it's 2900. So if we add all the purchases and with the beginning, remember all purchases with the beginning, we will get 29,880, the total cost. And this total cost for how much unit? 160, 400, 250, 330, 100, in total 1240. And from the question, in the question they have given the information that during the year the company sold 1000 units. So they sold these 1000 units, and now how much they left? They left around 240 units. So we have 40% done. Number one requirement, you are asked to show the cost of goods available for sale. So this much goods available, 1240, and the cost is 29,880. Clear? Then we have to show the ending inventory, which means these 240 units cost from this using FIFO. FIFO means first in, first out. So what is FIFO? If you consider it is a warehouse, first in, which means beginning plus purchases, if you maintain the sequence, first in, first out. So the ending inventory is here, isn't it? First in, first out, প্রথমে আসছে এবং প্রথমে বিক্রি হয়ে গেছে। সো যেগুলো আমার ইনভেন্টরিতে লাস্টে থাকবে, those will be considered as ending inventory. So let's see, if we consider this 1000 unit came first and we sold those 1000 units first, then the last 240 units is here. So let's see, date, using the FIFO method, ending inventory, date, units cost, total cost. So first we need the 240 units, right? 240 units ending inventory calculation. So first 12/2, see the last one, 12/2, because I said ending inventory is here, first in, first out. So 100 unit, 29 each, so multiply 2900. Then we need how much unit? 240 minus 100. So how much is left? 140 unit. But here how much unit we have? 330. So from this 330 unit at 26 cost, we need to take only 140 unit, which means 4th of September, 140 unit into 26. We cannot write 330 here because we need only how much unit? 240 minus 100, because we have already calculated the 100 units cost. And now you can ask again the question, sir, how did you get the 240 units? Total available 1240 units, and we have sold 1000 units. So how much we left? That's the ending inventory. The difference is 240. That's why we are calculating the account for that 240 units. So we have got 100, then 140. So 240 units, and we multiply 26. We have to take this 26 rate from here. So 3640. If we add together, we will get how much? We will get 3640, 6540, 2900 and 3640. We will get the total ending inventory is 6540. Now we have done with the ending inventory using FIFO method. The next one is we have to get the cost of goods sold. How much amount or how much unit we have sold so far, and we need to calculate, we need to see, the management wants to see the cost of those sold units. So how can we get this? Cost of goods sold using FIFO method. Cost of goods available for sale minus ending inventory. If we deduct the ending inventory from the cost of goods available from sale, we will get the cost of goods sold. তার মানে এই অ্যামাউন্ট আমাদের ছিল বছরের সারা বছরের বিগিনিং এবং কিনা সহ একটা অ্যামাউন্ট, এবং এন্ডিং ইনভেন্টরি আমাদের কত এটা। সো এন্ডিংটা যদি বাদ দিই, বছরের শেষেরটা যদি বাদ দিই, তাহলে সারা বছর কি পরিমাণ বিক্রি হয়েছে সেটা কি আমরা পেয়ে যাব না? সো অ্যাভেলেবল ফর সেল minus ending inventory 6,540. So we have got 23,340. So FIFO method is done. Next, move on. The LIFO method, second method, ending inventory. So now again come here. Cost of goods available for sale. They have mentioned LIFO. LIFO means last in first out. Last in first out means those inventory came last but sold first. So we will get the ending inventory here at the beginning. Came last and we have sold last. So we have got the ending inventory at the beginning. So from the beginning, date 1/1, which is the beginning, 160 units, $20 per unit, and we have got 3,200. Got it? That's the opposite of FIFO. LIFO is the opposite of FIFO. Most of the students, they confuse FIFO with LIFO. FIFO means first in first out. From the cost of goods available for sale, if it is FIFO method, the ending inventory is here. You have to calculate from here until you reach the desired number. Desired numbers mean the difference, cost of goods available for sale and the selling price. Okay? So in this math is 240 unit. You may find different figures in your exam. But LIFO is last in first out, means it came last, but so we have sold first. So the ending inventory will be at the top. So from the top, 160 unit, $20. How much? 3,200. We are required to calculate the ending inventory and cost of goods sold for only 240 units. So from 240 units we have already got 160 units. So how much units we need to calculate? From the second column, it's 4,000. March 15 they purchased 4,400 units. So we need only 80 units to fill this 240. Here again 240 total. So 240 into that particular rate 23 multiplied 1840. So if you add, you will get how much? $5,040. Now the cost of goods sold calculation same as FIFO. Cost of goods available for sale 29,880 minus ending inventory, this one you will get 24,840. That's the cost of goods sold under LIFO. So most of the accountants and most of the authorities, they may think that okay, it is too annoying to actually consider these two methods, first in first out, because one school of accountants, they think that FIFO is more reliable. Another school of accountants, they actually believe that LIFO is more acceptable. Now we are in the middle. So number 3 is average costing of inventory. So what is average costing of inventory? We need to first calculate the ending inventory. So you can see there are different unit costs. So the average we will have only one unit cost, not the different. So it may face difficulties, or you may face difficulty to understand or to calculate. So now they simplified it. Ending inventory equals to 29,880, which is the total cost, divided by total units. So if you divide it, total cost divided by total units, you will get the per unit cost, which is 24.097. See one thing, here you will get $20 beginning inventory, then 23, then 24, then 26, then 29. But if you average is, you got only 24.0207097. So 24 and something. That's the average. Okay. So for 240 units, you need to multiply by 240 into with 24.097. So you will get the ending inventory of average costing is 5783. So again the same thing, cost of goods sold. Cost of goods available for sale, $20,880 minus $5,783 taken from here, and you have got $24,097. Okay, so using these three inventory costing methods or cost of goods sold, we have got three cost of goods sold. One is this one, so we have got three cost of goods sold. FIFO cost of goods sold is 23,340. Number two, LIFO cost of goods sold is 24,840, and number three, average is 24,097. So we have three costs, but in the income statement or in the financial statement we can show only one cost of goods sold. So which one is more preferable? There's a question for you, open question. You have 23,340, the cost of goods sold. That's all our cost of goods sold cost. So which one you will accept and which one you will put or show in your statement? 23,340, LIFO 24,840, and average, which means 24,097. Which one is preferable? If it is a full class, not the online class, I will ask everyone to raise your hand. Those who think, please raise your hand. Those who think FIFO is preferable, or please raise your hand. Those who think LIFO is preferable, or please raise your hand. Those who think average costing is preferable. But now I am giving the answer. LIFO is mostly preferable by the accountants nowadays. It is the highest. You know why? You may confuse that, sir, we are cost effective or cost efficient, so why we need to show the highest cost of inventory, cost of goods sold in our statement instead of showing the lesser one? That's the reason. Because from the sales revenue minus cost of goods sold. So, for example, is 100,000. Yes, 100,000. If you deduct cost of goods sold less, or maybe for example 30,000, you will get a GP, which means gross profit, of 70,000. So higher gross profit which means the higher operating profit, you have to pay the higher tax than net lower net profit. But if you show the cost of goods sold 40,000, you will get here 60,000. So you have to pay tax less from the operating profit. That's why, although there are many controversies regarding this, still many accountants and researchers are working or doing research on this. But most of the accountants in the world, they follow or they prefer LIFO, last in first out, because if they follow last in first out, they can reduce the tax, they can pay less tax. So that's all from my part. We have covered, along with the theories, 2 chapters. First one is chapter 4, worksheet, and then inventory costing. Now our next topic will be the income statement, preparing financial statement. We will start preparing, we will show basically how to prepare financial statements like income statement and owner's equity statement, then cash flow statement, balance sheet, or statement of financial purpose. Our main purpose is to give you an idea about the present financial statement, and after that we will show you how to analyze those financial statements using horizontal, vertical analysis, ratio analysis. And then the last chapter will be calculating the receivables, accounts receivable section. So I need 3 more videos or 3 more lectures to basically cover the syllabus, to complete the syllabus. So till then, goodbye, Allah Hafiz, stay safe at home, don't go outside. You all have the internet access. If you can access Facebook, you can access those things. I will upload each and everything on SIS, and you will be given the YouTube link. I will upload this thing on YouTube at my channel. So if you write the accounting for executive MBA question, you will find this video, inventory costing. So you have the book, you have the question, just match everything carefully. I believe, I hope everything is visible and I have delivered a wonderful lecture. That's my confidence basically. Just kidding. But if you face any problem, just give me a call or set an appointment, or you have the Google link. I've sent you the Google Meet Hangout link. You can come to online along with your classes and ask any question. And also, as per the instruction of the head of the department, it is your obliged duty to contact with her, because she is conducting your business math. Okay, so business maths needs this kind of online sessions. So don't sit idle, okay, at your home. It is your opportunity, it is your responsibility to finish your tasks regularly. Thank you. Thanks a lot.